Welcome, G-traders. The chance of a moving short-term interest rates out of a negative territory next year was not zero, the Bank of Japan governor said yesterday. The Japanese yen's reaction to such an outlook will likely be long-term. However, the expectations of future Federal Reserve decisions remains the main driver of currency movements. With the Fed firmly expected to ease next year, risk sentiment got a second wind in the second half of December. Treasury yields, which had boomed on the prospect of a hawkish Fed, dropped sharply. For example, the 10-year government bonds on October 19 held above 5%. And today, they has recorded the lowest levels for the past 5 months, near 3.8%. Falling US Treasuries pushed the price of the US dollar back to its 5-month lows. At the beginning of Thursday, the US dollar index weakened against its 6 major counterparts and slipped 200.70 points. Today, the most pronounced US dollar sell-off was observed against the Chinese yuan. If the bearish trend continues, the losses of the world's main currency this year may amount to 2.6%. It will be the first decline since 2020. Given that the currency maintains downward movement within the daily range of 100.70 and 100.90, the retreat of the dollar risks continuing, testing the support of 100.60 or even the psychological level of 100 points. Technical resistances are located near the 101.50 and 101.90 marks. While the US monetary regulator is waiting for further cooling of inflation and trying to organize a soft landing of the economy, the Bank of Japan is concerned about other problems. On Wednesday, Kazuo Ueda said that the risk of inflation growth above the target 2% was minimal. Therefore, there is no need to rush to cancel the ultra-soft monetary policy. Nevertheless, the Bank of Japan did not rule out the possibility of bringing short-term interest rates out of a negative territory next year. Even such an elusive prospect managed to overshadow the generally less aggressive statements of the head of the Bank of Japan and strengthened the yen. The Japanese currency was also supported by economic data released today. Retail sales in Japan accelerated for the first time in 3 months, rising by 5.3% year-on-year in November. Auto sales showed the strongest increase, surging by 11.3%. Japan's preliminary annual industrial output also improved by 5.3%. The Japanese currency strengthened below the critical support of 141 early Thursday, amid an improving situation in the country's economy. The dollar-yen pair continued the bearish trend and declined within the daily range of 140.70 and 141.80. Therefore, a breakout toward the technical support at 138.70 is not excluded. The nearest resistance for the pair is located near the psychological 141.50 and 142 levels. The weakness of the US dollar did not help the currencies of Australia and New Zealand to hold the heights reached earlier Thursday. The Aussie rose on elevated prices and then moved to fall with them. As a result, its price turned out to be very volatile, retreating to the lower boundary of the daily range of 0.6830 and 0.6870. At the same time, the resumption of the bullish scenario and the Aussie's retest of the 0.6850 and 0.6890 resistance level levels are not out of the question, and the pair's next technical support level has moved to 0.6815. In the Asian session, the New Zealand dollar was trading between the support at 0.6330 and resistance at 0.6370. Given the low volume of trading in the last week, it's unlikely that there will be any dramatic changes in the forex market. Nevertheless, the reports on the labor market and home sales, which will be published today in the United States, may boost the US dollar, and the US currency's movement will affect its Asian counterparts. And that's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below, and see you online soon.